Hello and welcome. You with us here on BTTV. I'm Abha Bakaya. Let's take a look at how markets are faring this afternoon. It's not looking all that great. We are continuing to see tepid trade, cracking 59,000 also at one point. A lag coming in, particularly on metals, for example. That's one pocket that has been looking a little weak in trade of late. And IT somewhat a little bit in today's session as well, with Infi being one of the top losers. Let's in fact bring up some of those top losers for you to give you an idea of the overall picture in trade today. Adani stocks, of course, continue to see selling coming in as well. We've got on the downside, Adani Enterprises down 8.5% today, almost 9%. Bajaj Auto, UPL, 4-5% cut. So it's really not a great day on some of these heavyweights. Tata Steel, Infi, Eicher Motors. The losers list does go on. In fact, we're definitely seeing a tilt towards those declines in today's session so far. Then we welcome on board Amit Harchekar, who's joining us as well on the show today. Amit, what's going on with the markets?
Well, I think the markets have seen a good amount of correction, especially from 18,200 onwards. We were anticipating a correction of more than 15%, but we have seen that much fall coming in most of the mid caps and small cap counters, but we haven't seen Nifty cracking below 17,300. We were holding up quite a negative view, and we were expecting that by at least we would see Nifty going below 16,000. But at current juncture, I think markets are giving you signs that the bottom is quite near, and in the short term, markets are poised for a good rebound. So we have asked our clients basically to close off all the short positions and start going long from today. We have expectations that in next 2 months, Nifty should be able to cross 19,000 with good conviction.
All right. So, where do we see interest sort of skewing towards, Amit, at a time like this? And we've already seen a fair amount of safety coming in when it comes to the large caps or to the traditional FMCG / defensive names like an ITC. ITC, in fact, is at a record high right now.
Well, my sense is market have already felt the impact of the selling in mid cap stocks, and I think next move it would be a phase where the money starts diverting from your mid cap and small cap basket all the way toward large caps. We think that is the one factor which would trigger the rally of around 2,000 points in the Nifty. Second factor we think is the weakness in the Japanese yen. I think that turns out to be a positive factor for Indian markets. Whenever Japanese yen has depreciated, if you see there is a lag effect in the Indian markets where Indian markets have done well. Thirdly, if you see there is a good setup which is visible in US markets, especially Dow Jones Index, which is currently trading with a bullish flag pattern, and that projects a upside of around 9.5%. So we think that could be one trigger where the US markets going up, and we would have a replica effect in the Indian markets.
All right.
And fourthly, my sense is if you see a setup in the Rolex 30 index, which is basically the Sensex in USD terms, falling wedge, which is again a very bullish setup. So even there, we are expecting 9% up. So overall, we see a lot of factors. I think that would help the index to move higher, and I think the rally would be driven by only large cap stocks.
Okay, let's take a look at some of those large caps in particular. Let's talk about a Reliance, let's talk about an Airtel, and understand better as well the kind of optimism you have on these names, even financials, Amit, from within that basket, what perhaps would fit into this category?
Well, my sense is Reliance is a one stock which haven't done well since last 3-4 months, and we think eventually the stock has already completed its major consolidation zone on a 6 to 8 month basis, and the immediate upside what we are expecting would be around 3,500 to 3,400 on an optimistic zone, and on conservative basis we are seeing a target of 3,100. So the 2,200 points rally which we are expecting in the Nifty itself, I think 1,000 or 800 points itself would be contributed by Reliance itself. So Reliance, we think the setup is quite good. Second would be Bharti Airtel. There too, again, we think the stock is already entered into a retracement zone. So 730, 740 becomes a good area from where the next leg of rally could begin. Here too, we are expecting a target of around 950 to 975 in quick span of time. So again, any decline in Bharti Airtel, I think it becomes a good buying opportunity. Banking, we have a more or less a neutral stance, although we have seen a good correction in Bank Nifty from 44,000 levels. But from here on, we expect the initial rally of Bank Nifty to extend only towards 42,000, 42,500. But after that, I think Bank Nifty may start underperforming. So overall, we think the next leg of rally would be majorly led by your non-financial segment. So even IT could be helping the markets to move up basically in later stage. But at present, we think banks, Reliance and Bharti should be a key mover.
Okay, fair enough. In terms of the kind of levels that we're watching out for, Amit, do you want to give us a sense of that as well? Because, we've had indicators suggest that perhaps we will see buying coming in at lower levels. We've cracked 59,000 today as well. And on the Nifty, too, what are the kind of indicators that you're tracking? What is going to be oversold? And what range do you feel we're going to be trading in over the next week?
Abha, let me put it in this
Yeah.
way. If you see the Nifty's decline in last 7 trading sessions, last 7 days, we have seen Nifty forming consecutive lower lows. So generally, that setup in market terminology is called 7 bar lows. That is a signal generally when market bottoms out, you have such type of patterns emerging out. From a Nifty perspective, the bottom for the Nifty could be anywhere between 17,250 to 17,320 zone. In Sensex terms, we don't see Sensex going below 58,700 because that turns out to be important Fibonacci levels. And if that levels are not violated on a closing basis, we think market is poised for a major recovery. Immediate upside on 1 to 2 days perspective, we are expecting Nifty to close around 17,700, 17,800. Basically, this weekly closing, we are expecting the closing should happen well above 17,800. So overall, we believe we are currently trading at the lower end of the trading range, and from here on, further downside is again we don't think so that might happen in the near term.
Okay. Well, while everyone's been confident of the level sustaining, we have gradually been seeing a bit of sluggishness and erosion coming in, largely, of course, also due to, what we've seen on the Adani Group companies. One bright spot today, real estate, Indiabulls Real Estate, Oberoi Realty, DLF, Godrej Properties, Brigade, Shobha, the entire pack seems to be seeing some kind of traction coming in. What's your view on the real estate pack, Amit?
Well, most of these real estate stocks are beaten down and they are into an oversold terrain. So you can expect a good rebound. Uh, we think Indiabulls Real Estate is currently trading at around 61. That stock can go up to 65. Brigade Brigade 2, again, we think this has a potential to go beyond 520, 525 zone. Again, this would be good level to get in. If you need to put a stop loss, I think 460 would become a good stop loss on a closing basis. And if you see the deviation wise, most real estate stock are considered to be high beta. So before market bottoms out, they tend to start outperforming the market. So I think that could be the one reason we are seeing good rally in the most of these real estate companies.
So let me just come back to IT again for a moment and talk about maybe specific stocks there, because again, when it comes to kind of the hit on the index, one of the big pockets today is IT. So from within that basket, even if you feel the worst is over, Amit, where would you be looking for fair value? Do you feel all of the heavyweights in that pack are a good buy opportunity at these levels, or would you be selective?
Well, I would not be buying the IT stocks today itself, maybe. But what I think is, after a few days of rally, the moment Nifty starts trading about 17,700, 17,800, I think that would be the time most of these IT stocks would have bottomed out. Infosys, the support range comes in the zone of around 1425 to 1450. So I think that might get tested even at a time when market would be into uptrend. TCS is one stock again can be considered when it comes down to the levels of around 3250, 3275. There too, I think that could be an intermediate bottom with a potential target of around 3500, 3560. Uh, so overall, if you see the performance of IT stocks, we don't think that Nifty IT index has a potential to make a new all-time high. They are only poised for a retracement, which could be in the range of anywhere between 7 to 9%.
Okay, so from the mid-cap space, are you completely staying away? Are there particular names there that are still in your portfolio or that you're still suggesting, Amit, or is it a complete avoid?
Well, we in mid-cap segment, I think we are suggesting clients to focus morely on oil and gas space and metal
Okay.
counters. There too, our best pick would be Oil India, where we are expecting target of plus 400. Then in metal pack, we think sale is one stock which can be considered even at these levels where we are expecting a target of 120. Uh, so overall, we are not focusing too much. Basically, of our entire portfolio, current weightage what we have allocated to mid cap counters would be less than 15%. 85%, I think we are still sticking with the large caps because we feel that at current juncture, the money would be diverted from mid caps to large caps, and I think that would be the key driver for markets going towards 19,500 in the Nifty terms.
Okay. What's your view on Gale? That's just popping up today on the charts. Anything interesting that's coming up there when you're looking at technicals?
Well, we have a very positive view on oil and gas pack. In fact, our belief is the international crude prices are already in the zone of bottoming out at around 75, 80 zone, and we are expecting in next 2 to 3 months crude oil to go above $100. Gale, we think the stock has already formed a strong bottom, and the immediate target we are expecting would be 135 to 140 zone. 110 is a short-term resistance, but we don't think so that may sustain beyond 2 days. So any declines in Gale from current levels should be used as a buying opportunity.
Okay, so that's the view coming in on Gale out of the oil and gas pack. That's one of the names that Amit is tracking today. Let me just take you through some of the other, action when it comes to the broader markets as well. Real estate, as we mentioned, standing out, and then a smattering of names here and there. But nothing too much to write home about. It's really more a hit on the index that's the takeaway this afternoon, and the advance decline ratio clearly skewed towards declines today. It's those levels that everyone's watching out for. Big cuts also being seen across the board on several of those heavyweights. But as Amit said, perhaps a good time to get into select names as well. And he's focusing very much on the larger cap names. Amit, what about discretionary, auto, that entire segment? Where is that on the radar? Again, if there are specific names there that you're tracking, even if they're a void, because we've seen completely lackluster action when it comes to auto and starting to get worried a little bit about discretionary outside of that as well.
I think if you see the entire consumption stocks, I think they have seen good amount of correction in last at least 7 to 8 trading sessions. But I think Nifty Auto Index currently has moved into a very strong support zone. In fact, the rally which we saw from all the way 26 December onwards, almost 61% of the entire rally has been retraced, and I think that turns out to be a very strong support to again re-enter the long positions at current levels. We like M&M at current levels because we think the again stock has entered into a very strong support zone of 1200, 1250. We are expecting again stock to go higher and test around 1400. Second stock we like would be Maruti at this juncture. There too, we think a sort of a cup and handle bullish formation is taking place, and that's why we don't think prices going below 8500 in the short term. There too, we are expecting stock to form a new high closer to 9800 to 9900.
All right, so that's the view coming on some of those auto names as well. 140 points down now on the Sensex, and Nifty down about 60 odd points, 17,403 now, and 59,322, far closer to that 59,000 mark than that 60,000 mark, as we can see so far. In today's session. Just a few moments to go, 15 minutes to go before we close today. So it looks like it's going to continue to trend lower. Any immediate triggers that you're watching out for, Amit? We've just kick-starting the week and not on the best note at that. If we take a look, I think we're down 2,000 points. In fact, let me just take a look on the on the Sensex in 2023 so far already. So, it's been looking, very, very sort of choppy, especially for investors post the Adani saga. Any immediate triggers you'll be watching out for? Or as you mentioned, of course, perhaps some buying to coming in at lower levels, not too concerned. That's the major takeaway for you.
My sense is a lot of negativity is already priced in at current levels. In fact, I would have been worried if Nifty would have cracked below 17,000 levels maybe in the previous week. But right now, we think all oscillators are indicating that markets are already into an oversold zone. So from here on, more downside is very unlikely. The main trigger that could drive markets higher is, as I think, that US markets are clearly indicating that they are at a support zone. From there, here on, they can go up by around 9.5%. So I think that would be important trigger for markets going higher.
Right, Amit, we'll leave it there. Thanks so much for joining us and taking us through all the market action this afternoon. Slow start to the week. Let's see how things shape up as we move along. Thanks so much for watching.
I am Rachna Dhanrajani, joining from Royal Ranthambore presents BT Golf Hyderabad edition, and I am joined by
Dheeraj Mehta. I work for Oberoi Hotels. Currently, I'm the general manager at the Trident in Hyderabad.
I'm Chatradhar, work for Client Associates. I head up the practice and the executive director of the firm.
Awesome, sir.
I'm Chandramani Panda. I work as Chief Financial Officer for Metrochem API Limited.
Great. So I